Hey, Think Realty. Thanks so much for joining us on the podcast today. My name is Eddie Wilson, the founder of Think Realty. Founded it in 2013 as a give back to our community because as a third generation real estate investor, I wanted to bring real estate information to the marketplace, the things that I learned around a dinner table with my grandfather and father. I just wanted to continue to bring that out. And that's why we founded Think Realty 12 years ago now. It's been a long ride and it's been a lot of fun. And we've got some great information for you on the podcast today. We're actually live on location in Phoenix where we've got our Think Realty conference. And if you haven't been to one of our conferences, make sure you sign up for one of those in the future. We've got our August 13th one coming up that's a virtual conference. Make sure you sign up for that. I want to say a quick thank you to our podcast sponsor. This episode is brought to you by Real Property Management. Working with the right property management company can put more money in your pocket, not less. Real Property Management provides a higher standard of property management to make sure you're maximizing the return on your investments. Experience the real difference with Real Property Management. Visit realpropertymgt.com. That's realpropertymgt.com. Today's guest is Marco Castaneda with Velocity, and appreciate you being on the show today.
I appreciate you having me here.
Absolutely.
Really excited.
Very cool. You guys have done some business with us over the last year or two, and super excited to have you on the podcast. I know this is our first having you on here, so very, very good. If you don't mind, go back in time and tell us about Velocity. You're probably one of the older people in this business that have weathered so much, and so just tell us about the story there.
Yeah, it's really kind of a cool, unique story. So the company was founded in 2004. Mm-hmm. We had three partners: Chris Farrar, who's our CEO; Joe Cowell, who's our CEO, my direct boss; and Jeff Taylor, who heads capital markets. Mm-hmm. They just started off a little office, three of them, with small balance commercial loans, just onesie twosie kind of stuff, and then just build their way up and introduced the 1 to 4 part of it, all business purpose, in the early 2012, 13, and it just kind of slowly graduated, gradually grew from there.
Yeah, and so you've obviously weathered the 2008 crash, you weathered the COVID era, which was really difficult on private lenders. And what have you what is the evolution of Velocity? So you started off with what you talked about, but what is the evolution and what are you into today?
Yeah, absolutely. So actually when we started was the vision of the company. I go way back with Chris and Joe back in the subprime days in the mid 1995, 96 area. But the goal was to provide an outlet and loans for the self-employed borrower, that experienced investor that couldn't get traditional financing from a bank or a normal lender. So that was kind of the goal going in. And we really, obviously, with our growing pains, we went through some bumps and bruises, but we got to a spot now where we kind of mastered our niche. Mm-hmm. And then we added our securitization model. And then, as time grew, we stuck to that to avoid kind of the pitfalls of the crash and everything. I have to hand it to our capital markets group and Joe as well. They're very, very good at seeing danger ahead, mm-hmm. and then kind of pulling back to make sure we don't do anything stupid to put us in a position where we're going to be hurt. So we got through all that. Now we're in a position where we went public 5 years ago. Mm-hmm. It was our 5-year anniversary. Went public, so we're not private anymore. We're a publicly traded company. Our stock symbol's VEL. And the market's kind of stabilized, right? The rates are now down. So we feel the next 3 to 4 years is going to be a huge market for not only Velocity, but for the private lending space. We do 100% business purpose deals. And obviously the rates, we don't see the rates really going to have much change in the next couple of years. Consumers are kind of getting out of the market and investors are buying in. So we feel this is a good opportunity for not only for us, but for our space to really grow.
Sure. If you don't mind, also back up and just tell your story. So how did you get involved? How did Marco get involved in Velocity, or how did all that take place?
Yeah, it's a cool story. So I've been in the business 30 years. I started way back in the mid-90s, right outside of college. And one of my first jobs was I worked for a company called WMC. It was Weyerhaeuser Equity Services at the time. Mm-hmm. Weyerhaeuser was a paper company, a Fortune 100 paper company at the time that branched off and did mortgages. And we started a kind of like a non-QM, was some prime back then, but was non-QM now. we started a division, and Chris Farrar, our CEO, was the first AE hired. I was the second, and we would be next to each other in cubicles. No cell phones, just phone, yellow pages, everything. And him and I kind of competed. Obviously, his career, he accelerated a little faster than I did, but that's how the relationship started. And then I branched off and became a broker, and I was a broker for 25 years. And then when Chris started his company, I started brokering to Velocity back in the mid 2000s when they were doing their thing. So we've always kind of kept in touch. A lot of the people that work for our company go back to us back at WMC, so there's a lot of close relationships. And there's a lot of people that have been with the company 10 plus years.
Sure.
And then I got into more of the private money space with the broker. They reached out to me in 2018, and I ran into Chris at a trade show in Vegas, and he's like, "Hey, come to work with us." So we worked out a deal and came over, and it's been great ever since.
That's awesome. Yep. That's awesome. And what's your primary role at Velocity?
I'm the national sales director. Okay. I'm in charge of sales and marketing.
Okay.
And then I have a production piece where I'm not overlooking ops, but I have a big kind of saying how the operations do.
Yeah. Okay. And so tell us a little bit about Velocity. If my viewers and listeners that think Realty primarily, they're primarily single family investors. A lot of them have now bridged into multifamily, or they've gotten into brokering private money. Like, they've kind of spread out everywhere just because the inventory has been low nationwide for the last 4 or 5 years. And they've all looked at various other things, but by and large, they're mom and pop real estate investors. They've got 6 to 8 rental units. That's who's typically listening and watching. And so if you don't mind, speak to them specifically to what Velocity can do.
First of all, you are people. You are our people. That's what we do. So we're a nationwide, publicly traded business purpose lender. We are a wholesale lender, meaning that 100% of our business comes from mortgage brokers, but most private investors and real estate investors have a broker's license or deal with a close broker. So what we service is we do 1 to 4, short-term, long-term, and fix and flip. We also we have a small balanced commercial piece, which is multifamily, mixed use, some warehouse industrial, auto repair, retail, that kind of thing. And we have a ton of experience. A lot of us have been brokers and investors in our company, so we have a really unique model as far as experience and having that know-how to kind of guide you from start to finish. So, but what really kind of separates us from the rest of the private lenders is, one is that we're publicly traded, so capital's not an issue, but it's our model. We have a securitization model. We securitize our loans, which allows us to recapitalize our debt, right? Which is really not heard of in our space, and so that kind of gives us a lot more leeway and gets us to be more aggressive on what we need to do for the investors.
Sure. Yeah. And being publicly traded, what are the benefits of that?
Benefits is that the whole world could see who we are. We're not hiding anything, right? They know how much money we have. They know what we're doing. They log on to our quarterly earning report, reports or calls. So we're exposed, and that's a good thing because we want to be. And we built a good company, and we're very strong financially. So that's a huge positive. So and from an investor standpoint, when you're going after, you're looking into lenders or banks or whoever you're looking for capital from, what are the most important things, right? You want to make sure they have the capital.
Sure.
2 is you want to make sure they have the team that understands your vision and what your project is. And 3 is you want to make sure they get to the finish line fast.
Sure. So,
and that's kind of our model. And yeah.
Are you guys pretty aggressive in your rates? I mean, do you try to stay pretty aggressive?
No, we're not. We're priced in the market. It depends. Honestly, it really depends. If you're comparing us to non-QM lenders like DSCR lenders, no, we're a little higher. If you compare us to a lot of private lenders, we're right at what they're at or lower.
Sure.
So it's hard to tell. It's situational, but we're priced based off risk and based off protection. We want to make sure that we're we're going to be alive in the next few years. Yeah,
for sure.
So
you mentioned alive in the next few years. there's so much rhetoric out there as far as like where the market is, where the trends are headed. We seem to be very in this like stable place right now. Nothing's really moving fast and furious. There's really no major rise. There's really no major fall. It just seems to like be this very steady thing. Even you go back to when the rates dropped last fall, or coming into winter there, we had the rate drop. We had the election, kind of like everything pent up because of the election. Yeah. But if you went back, if you looked at it statistically, it would be a non-event. Like it was like nothing actually happened when these variables were changing. And so we're in this space, but where do you think we are headed as and I know I'm not asking to be the economist now, but it's like I'm just curious, like as a company, how are you guys preparing for the future? What's your outlook as a company? That's
an awesome question, and we have a lot of meetings about this. So, like you said, we're not economists, but one thing we do follow the trends, and guys like Joe and Chris are very in touch with with Wall Street and what the bond buyers are looking for. So, our outlook simply is there's a banking crisis, right? So. For the banks, for them to kind of repair themselves, we're looking probably 2 to 3 years until you see maybe a significant rate drop. So we don't know, but this is kind of what we think. And we're kind of heading into a consumer recession. And as we all know, when a consumer recession happens, consumers take a step back and the investors come in.
Yeah.
So, and the bond buyers on Wall Street have a huge appetite for non-bank, high-yield paper, and that's what we do.
Right.
So we think we have a really good 3-year run ahead of us in this market, and obviously we're hoping, but we feel good about it.
Yeah, it's interesting how little capital is moving into the bond market when let's just say when Wall Street as a whole is undulating so much, and I think it's because of what you're saying. It's like their appetite for risk is a lot different than it used to be, and they're looking for yield. And so it's like when you have a similar risk with a bank versus someone like it's like it's a little easier. It's like you're going to take the risk. You might as well take the risk with the yield that is much greater.
Exactly.
And so. Yeah, it's fascinating. I have kind of a similar, and we get the chance to spend a lot of time with economists, and I get kind of a similar feeling. But a lot of the economists we're in a space that's really unpredictable because we're not. Most economists are talking about cyclic, events. Like everything's a cycle. Well, since 2008, we haven't been in a cycle. Like there is no 7 to 10 year cycle. It's from 2008 until COVID. Like that might have been when that cycle began because we were kind of hitting peaks. But then we artificially, inseminated the marketplace with, printed money, and it just like left this like cliff, like this ledge. And so it's like. It's really hard to tell, and then you still got massive inventory problems. We're 3 million homes underbuilt in the nation. You have less than 1 million, building permits being pulled, so that's not going to get any better. So I think that what you're saying is like where a lot of economists land, which are a recession, but for the consumer,
Yeah.
But as a real estate investor, it's
an opportunity.
That's an opportunity. Yeah. And so if you're a real estate investor out there listening, the best thing you can do is continue to line up your deals and continue to line up your capital, right?
Exactly.
Because as a deal comes, it's going to, if you are against me or against 100 other real estate investors, the person that has quickest access to capital are the ones that potentially get the deal. And so it's a great way to think about it. So how can they get in touch with Velocity? What's the best way for them to look and see if you guys are interested in partnering on their deals?
They can reach out to me, or they can go to our website directly, velocitymortgage.com, but they can reach out to me anytime. I don't know if you guys provide my contact info.
Yep, we will.
But you can reach out to me, and then I can make sure they get the right, I put them with the right people in our company and get their loan started.
That's great.
A guy like Cam over here, he could be a big help.
Yeah, very good. Just kind of last question, and we'll wrap up. What trends are you currently seeing? You said you guys are kind of studying trends, looking at trends. Are there any additional trends that you're just seeing? Are you seeing people move out of multifamily into multifamily? Are you seeing people just where are you seeing the general real estate investor, moving? Are they, there's been a lot of conversations about them moving out of the big markets into tertiary markets. What is there any trends that you at Velocity are seeing?
It's funny. It's another great question. I think there's a couple moving parts with that, right? I think you have investors going in declining markets, right? Because they're obviously it's going to be the price point's going to be better for them. So we're seeing certain markets in the country starting to dive.
Would you mind sharing any of those?
I'd rather have my data in front of me.
Okay. Yeah.
I don't want to put in a same.
Yeah.
But there is definitely some parts in the country that are doing that, and I honestly can get back with you on that as far as exactly. Yeah. Because we go by zip codes and stuff. So, but we see that happening a little bit. We're seeing a lot more, like short-term bridge because of the pricing, right? So. Instead of getting out of the long term, we're seeing get the short term, waiting for, people are kind of waiting for the rates to do something, and then they have the flexibility to move back and forth. But I don't know if anything really stands out. I'm seeing our small balance increase quite a bit. We're about a 70-30. We fund about $200 million a month in production, and about 70% is 1 to 4 and 30% small balance commercial. We're definitely seeing a peak in commercial business.
That's interesting. There's not a lot of places to go to get commercial right now, especially a lot of private lenders are just kind of walking away or at least holding on that.
Yeah.
So I could definitely see the people that are aggressive or at least available, are probably picking up quite a bit of the good opportunities.
Yeah. We're seeing a lot of. Multifamilies. We see a lot of warehouse industrial, automotive repair.
Sure.
Stuff like that. Yeah.
That's great.
Yeah.
Thank you so much for being on the show today.
Hey, thanks for having me. I had a glass. It was good.
Yeah, appreciate it. All right. Think Realty, thanks so much for being a part of the podcast today. One last thank you to our podcast sponsor. This episode is brought to you by Real Property Management. Working with the right property management company can put more money in your pocket, not less. Real Property Management provides a higher standard of property management to make sure you're maximizing the return on your investments. Experience the real difference with Real Property Management. Visit realpropertymgt.com. And like I said earlier in the podcast, August 13th is the virtual summit. We did that for the first time last year. It went really well, had great attendance and great speakers. We'll have people talking about capital, the capital markets, all the different real estate investing strategies like single family, multifamily, all the alternative asset classes, self-storage, mobile home parks. We've got a lot of great content lined up for you. Get your tickets at thinkrealty.com/virtual. Sign up today, and we look forward to seeing you on August 13th. Have a great day.